America just lost jobs. Wall Street just celebrated same week. That's not a typo. It's one of the clearest examples of how modern financial markets can react to bad economic news. Hi, this is Indranil and welcome to the Spotlight Media and Technology, where we go beyond profession, beyond headlines, beyond borders. Here's what happened. In July, the US economy lost 23,000 jobs. Economists had expected roughly 80,000 to 88,000 new jobs. That's a huge miss. And the revisions made the picture weaker. May and June job gains were revised down by a combined 103,000. The labor force participation rate also fell to 61.4%, its lowest level in more than 5 years. So the labor market wasn't exactly sending a boom signal, and yet the S&P 500 gained 0.6%, the Nasdaq jumped to 1.3%, and the Dow also moved higher. Why? Because investors weren't necessarily celebrating the jobs data. They were celebrating what the jobs data could mean for the Federal Reserve. Before the report, markets were concerned that persistent inflation could force the Fed to keep rates higher or even raise them. But weaker employment changes that calculation. The probability of a September rate hike reportedly fell from around 55% to 40% in a single day. Treasury yields fell and stocks rallied. In simple terms, bad news for the labor market because potentially good news for borrowing costs. That's the paradox. For US business owners and entrepreneurs, here's what matters. 1. The labor market is cooling. Retail lost nearly 19,000 jobs while financial services lost around 14,000. 2. Markets are increasingly trading on Fed expectations, not simply economic fundamentals. And 3. Cheaper money, if it arrives, could be coming because economic momentum is weakening. So don't confuse a green candle with a green light. From our ESG perspective, this is a governance and resilience issue. A resilient business doesn't simply ask where is the market going. It asks what is driving the market and what happens if that driver disappears. One hotter than expected inflation report could completely change the rate cut or rate hike story. At the Spotlight Media and Technology, we don't chase the headline. We decode what's underneath it. A market that celebrates weak jobs data isn't necessarily bullish. It may simply be dependent on the Fed. And for entrepreneurs and investors, that's the signal worth watching. If you are navigating economic uncertainty, ESG strategy and communication at your organization, we help companies with ESG strategy and communication. Link in the description. This is the Spotlight Beyond Profession, beyond headlines, beyond borders. Thank you very much for watching and signing it off.